Hi there, and thanks for watching this USD CAD Discovery #1 video commentary. I'm going to walk you through what we've discovered regarding the US CAD, our findings, our research. The discoveries we've made are pretty huge. We believe that the US CAD traded on the Asian session is probably the best opportunity that's available out there when it comes to currency pairs right now. It's very rare that there's a huge opportunity when it comes to a specific currency pair. This is very big. It doesn't happen a lot that a certain pair shows a certain behavior, a change in characteristics that can hugely benefit traders, that can give you sort of an unfair advantage, and that's really important. What happened about two and a half years ago when we thought about what would be the next robot that we would release into the market after a huge success with our first Forex robot, Forex Megadroid? We started researching a lot. We wanted to base our next robot on something different, something based not only on a strategy, but would also have another advantage, an outside advantage. And what I mean by outside advantage is just something outside of the strategy itself. After doing a lot of research, looking for opportunities, changes in the market, behavior, market behaviors in different currency pairs in different time frames, testing a lot of theories that we had, we came up with these USD CAD discoveries. Back then, we didn't know how big they were. We knew we were onto something, but we didn't know, exactly how big it was. In hindsight, we were obviously right. And as you can see today, USD CAD is the best currency pair to trade in the Asian session. It offers opportunities absolutely no other currency offers. And we're going to go over those opportunities right now. USD CAD Discovery #1 night tick volume. This is actually very simple. Currency price changes constantly. Depending on how liquid the pair is, how much trading activity there is, the night tick volume will be higher or lower. Here's an example. Here we've got a USD CAD 4-hour bar chart. Each bar here represents a 4-hour period. And in this case, it's for USD CAD. In this specific bar chart, we got label A here. You can see that this specific bar started at 0000, which is midnight. Now, as you can see, the tick volume here at midnight was 5,224. That means that during this specific 4-hour period, price changed 5,224 times. Now, at point B, there's a corresponding value shown in histogram format, and you can access this in MetaTrader very easily to verify this. So that's what tick volume is. Okay, so let's take a look at what we actually discovered about this. The night tick volume has increased in the Asian session dramatically, and that's probably really an understatement when talking in trading terms. And this is something that happens very rarely to a currency pair, but when it happens, it's huge. Take a look at this. In 2007, this is the monthly average nightly tick volume. In 2007, you can see throughout the whole 8-hour session, 358, 373 in February. Quite low throughout the year. Okay, November there was a bit of a spike there, but the average yearly tick volume was just 723 for the entire year. Okay, as time went on, 2008, it already grew to an average of almost 1,200, and pretty consistent throughout the year, continuing to grow. And you can see constant growth here. 2009, boom, almost 6,000. That's huge. That's like 8 times what it was in 2007. Okay, and it doesn't stop there. 2010, 8,000. 2011, 7,700. But again, with relation, it went down a little bit, but in relation to other years, this is huge. 2012, opportunity is skyrocketing right now, guys. Okay, it is. The average tick volume to date, 9,145. That is a big number. It's huge. And you're going to see why in just a minute. By the way, we did a recent poll of our subscribers, our Forex Megadroid subscribers. And actually, most people didn't even know about this huge volume increase, which is a great opportunity for traders, because if you should know one thing about trading, it's this: that money is made where an opportunity lies that other people don't know about. There are literally hundreds of thousands, if not millions, of Forex traders around the world. Most of them don't know about this. Why? Simply because it's hard to do so much research. Now, in hindsight, you might say, hey, you guys just stumbled on this. And yes, you're right. But think about this. You have so many things that you can research in currency pairs, so many aspects, so many characteristics. It isn't always easy. Sometimes it's just pure luck to stumble upon something, to find a certain, finding. And that's really important to understand. This is key here. Okay? How does PipJet profit from this discovery? The Asian session, by far the most profitable session to trade. Much more profitable than the European and US sessions. Most traders are tricked by the size of the price swings in those other two sessions. But that's just eye candy. Okay? It's just those price swings are really hard to speculate accurately. It's really very difficult to create a strategy, nearly impossible, honestly, that will have a good risk-reward ratio in those sessions. They're very wild, very unreliable. You got news releases, huge swings. You don't know if it's going to be a strong trend day, maybe not. You got ranging, huge breakout. How big of a breakout? You just don't know. We advise people, stay away from that. If you can count on a great strategy like PipJet's strategy, the Asian session can be extremely profitable, especially regarding the USD CAD pair. Until after 2009, early 2010, FX system robot developers had a huge problem. They couldn't figure out why their Asian session USD CAD strategies back-tested well, but then failed miserably when trading with real money on live trading accounts. As time passed, system developers, robot developers left USD CAD alone. They concentrated on other pairs, which is a huge opportunity for us today. For you and anyone really to trade PipJet with USD CAD, or even if you don't use PipJet, to trade USD CAD. Basically, any robot system can have a huge advantage trading the USD CAD. What happened really is that these strategy and robot developers failed to understand two things. One, what actually caused the problem back then, and two, that the problem doesn't exist today. It doesn't exist anymore. This is really important. It's a key element. And let me pause just for a second here. PipJet's proprietary trade indicator and price action indicator, both described earlier in the robots strategy video. And please make sure that you watch that video if you haven't already. Just so you understand the robustness of the strategy and you know what you're trading with, what's going on. That's very important. This was built to exploit this specific currency's behavior. The very thing that strategy and robot developers failed to understand. One of the main reasons why the robot is so profitable and accurate. What actually caused the problem? Well, visually, studying the Asian session, running back tests and MT4 strategy tester, things seemed perfect. But as soon as real money was involved, the robot's strategy lost money. Completely fell apart, just collapsed. And the reason was an illusion. It was all a trick. The strategy tester uses what's called an automatic execution model. This is very similar to how MetaTrader works with those market maker brokers who trade against it. So test trades are always filled with the permitted slippage. For example, have you ever seen a requote error in the tester? No, you've never seen that, and you won't. Now you know why. Basically, back then, in real life, it was a completely different reality. Due to low tick volume, which we saw over here, right, in 2007, 700, 1,000. Then in 2009, it went up. But in the beginning of trading USD CAD, 2006 and 2007, people didn't see that because the tick volume was very low. Obviously, the outcome was that low tick volume frequently resulted in bill prices several pips away from the last recorded price. And depending on what type of broker you were trading, the trades wouldn't open or close because the required price was not available because of the low tick volume. Or maybe it would open or close at the best available price. That price could be very different than the current price. So you got hit with maybe 20, 30 pips away from what you really requested. Okay, you got hit with a much worse price for your stop loss or your profit objective. Instead of getting the price where you wanted to exit the market, you actually got a much worse price. And your profit sometimes, 50, 60, 70% less than what your strategy robot predetermined that your profit objective should be. So either way, detrimental to trading back then. Trades not able to open, trades not closing, hitting stop losses, bad fills, huge slippage. But that only happened in real life trading. Back tests look great. And that was the problem. Let's take a look at an example here. On the left side here, you see a 5-minute USD CAD chart. Each bar represents a 5-minute period. At point A, the Asian section starts. Point B, a short trade is entered at 0.9608. Okay. Point C, profit objective 0.9595 not reached. That was the predetermined price of the profit objective of the system you would have been trading back then, per this example. At point D, here, the market moves back up. It never reaches the profit objective. It moves back to the trading entry price. And here's the important part. The robot tries to exit the trade at break even, but price isn't available due to low tick volume. So what do we get? No fill. This is the break even price that you more or less would have wanted to exit the trade at, because it simply didn't hit the profit objective and you want to get out. Okay, so what happens next? Point E, the robot actually exits the trade at the next available price. You understand now why the next available price was really far from the price point at D. Okay, look at the difference. It's because of a very low tick volume. So what you would have gotten was the next available price. You're actually forced to exit the trade by your broker at point E, which is 0.9624. And that, folks, is a 16 pip loss. Now, strategy tester, back testing, might have shown you that the robot exited at point D. It would have told you you broke even, or maybe, had a 1 or 2 pip loss. In reality, though, you actually exited with a 16 pip or even more loss. That's the way things worked back then. That's the way it happened. The point is, the cause isn't visually obvious when eyeballing the chart. Okay, looking for tradable patterns, checking the results of the strategy tester due to technical limitations, or checking the results of the strategy tester due to technical limitations that are beyond the scope of this explanation. Again, very important here. Please, if you take nothing else away from this explanation, the most important thing you have to realize is that current price for all account types is actually the price of the last trade executed by your broker for that particular pair. If you're forward testing a strategy on a demo account and your system opens or closes a trade, you'll always get filled at the last reported price. That's why it's important in real money live trading conditions. Okay, it's important that you understand that. Let's go ahead and take a look at another example. Assume that your EA has a buy order open from 1.3000 with the target set at 1.3010. As soon as price reaches 1.3010, a market order is generated on the broker server to sell out the position. That should theoretically result in a profit of 100 pips. But if the best available price happens to be 1.2999, then your potentially profitable trade actually booked a loss. And again, that happens. Back then it happened a lot with USD CAD. Today the problem doesn't exist. That's where profitable opportunity comes. As time moves on, the Asian session volume increased for USD CAD. Tick volume for the last several years 10 to 15 times higher than just 3 to 5 years ago. That's huge opportunity for anyone looking to develop trading strategies for the Asian session. Not only has the likelihood of real money accounts being filled at exact price expected, based on the last tick, not only has that become extremely good, but backtest results are now much closer to reality. If you design a strategy, backtest it. Use the CAD Asian session. There's a much, much higher probability for it to cope with real money live market conditions. And here's